Welcome. Today, we're going to build a blueprint for your financial future, and we're starting right now. We're going to break down a really powerful, systematic way to build wealth that, and this is the important part, doesn't require a fortune to begin. But first, let's just get this out of the way. We have to tackle the single biggest roadblock, that one little thought that stops so many people dead in their tracks. And it's this question right here. Do you really need a huge pile of cash just to start investing?
Well, let me be perfectly clear. That belief, as common as it is completely false. It's probably the biggest, most persistent myth in all of finance. And today, we're going to take it apart piece by piece.
All right, let's bust this myth wide open. We're going to see why so many people believe it, and more importantly, we're going to reveal the simple, incredibly powerful tool that makes investing accessible to absolutely everyone. Seriously, everyone.
And that tool is called a SIP, which stands for Systematic Investment Plan. Now, here's the key thing you need to understand right away. A SIP isn't some complicated product you buy. It's not a thing. It's a strategy. It's just a consistent, disciplined way to build wealth over time.
And this is where the beauty of the SIP really comes in. It completely changes the game. See, you stop worrying about when is the perfect time to invest, and you just focus on being consistent. It becomes automatic, kind of like a Netflix subscription, but for your future. And the best part, that entry barrier is so low, you can literally start with what you might spend on a cup of coffee.
So think of this as your own personal, automatic wealth machine. But every great machine has a secret engine, right? The part that does the heavy lifting. So let's pop the hood and see what protects you from all the scary ups and downs of the market. This is where the real magic happens.
That secret engine is called Rupee Cost Averaging. I know, it sounds a little technical, but trust me, it's the secret sauce here. It's the concept that actually turns market volatility, the thing that scares everyone, from a risk into your biggest advantage. The idea is so simple, it's brilliant. And this table just lays it out perfectly. Look, you invest the same 5,000 rupees every single month. In month 1, the price is high at 50 rupees, so you buy 100 units. But then, month 2, the market crashes. The price gets cut in half to 25. But because you're investing the same amount, your 5,000 rupees now buys you double the units, 200 of them. Then the market recovers a bit. At the end of it all, your average cost per unit isn't 50, is way down at 38.3. You automatically bought more when things were cheap. So what's the big takeaway from all this? The whole point is that this mechanism completely changes how you should feel about a market downturn. It's designed to take the fear out of the equation and replace it with, well, just simple logic. I love this quote because it's so true. Instead of panicking when the markets go down, a SIP investor can actually see it as an opportunity. It's a discount event. You get to pick up more of your future wealth for the exact same price you were already paying. It's a total mindset shift. Okay, so now you understand the engine, Rupee Cost Averaging. Let's talk about the fuel. The thing that takes this steady, consistent process and gives it that rocket-like acceleration over time. And of course, we are talking about the power of compounding. Here's a really cool rule of thumb to make this massive concept feel super tangible and easy to remember. It's called the 15-15-15 rule. The recipe is simple. You invest 15,000 rupees a month, you do it for 15 years, and we'll assume you get an average return of 15%. So what's the result of that simple, disciplined recipe? This 1 crore rupees. By following that simple rule, you have the potential to turn those regular, small investments into a truly massive fortune. And get this, your total investment over that time is 27 lakhs. That means the other 73 lakhs, that's just your money making more money. That's the magic right there. And this right here highlights the single most critical ingredient in the whole recipe: time. It's like a snowball rolling down a hill. It starts small, but as it keeps rolling, it picks up more and more snow, getting bigger, faster. That's why the growth in the last few years can be absolutely mind-boggling, often dwarfing everything that came before. So you might be thinking, is a SIP the only way? Well, no, of course not. You could also invest a big chunk of money all at once, which is called a lump sum. But as you can see, for most of us who earn a regular salary, the SIP is the perfect starting point. It's built for us. It smooths out all those bumps in the market, and best of all, it takes away all the stress of trying to guess the perfect time to invest. Okay, so we've busted the myth, we've looked under the hood at the engine, and we've seen the power of the fuel. The logic is solid, right? So let's stop talking theory and get practical. How do you actually get this machine working for you like today? It really is this simple. 3 steps. First, get your KYC done. That's just verifying your identity online with your PAN and Aadhaar. It literally takes 5 minutes. Second,
Pick a goal. Don't just invest blindly. What are you saving for? For most beginners, a simple, low-cost index fund is a fantastic place to start. And third, and this is the most important step, automate it. Set your investment to happen the day after you get paid. You're paying your future self first, before you can spend it anywhere else.
And that's it. Once you follow those steps, your wealth machine is officially on autopilot. The power to change your financial future isn't some secret held by the super rich. It's right here, in your hands. And that whole incredible journey can begin with one small, systematic step. So the only question left is, what future will you start building today?